Good day, everybody. It's Greg Schnell, and I am here with your Daily 5. So I'm getting pretty optimistic about the oil and gas business heading into the second half. We have way more people buying cars, don't want to take public transit, moving back into the automobiles. We're seeing this phenomena worldwide. We're seeing it in China, Europe, America. So lots of issues on that front. New cars aren't available. But lots of pressure on the used car market, so things are moving quite rapidly. We also have jet fuel picking up, taking off to a new high, or not new high, but improving highs. And we have production still relatively subdued. So the UK is down considerably, Canada, America, rest of world, all putting in lower highs in terms of production. So one of the imbalances that we're looking at here is we're seeing JP Morgan, Goldman Sachs, Standard Charter, 9 Point Funds, Bank of America, all of them are predicting higher prices for oil right away here. Goldman said before the summer potentially, or by the summer, we could see $80 oil. Oil hovering in around the $63 or $62 point when it was written a few days ago. So all of the charts today are set up in the oil sector, and I think there's lots of room to the upside here. So especially at $80 oil, that would put us at multi-year highs. So here's Ovintiv, and what we've got on Ovintiv is uptrend from a deep low down here in the 250 level all the way up to $28. You can get by on that kind of return, even better than Tesla. And then a pullback here from 28.50 down. We're hovering around $25 at the time of this recording. And what you'll see on this particular setup is that all of the indicators have been trending higher, a gentle pullback for the last 6 weeks or so. And the full stochastic looks like it could be ready to turn back up here. The stock is one of the top performing stocks in the mid-cap group. And the PPO is positive, so even if you get a small pullback and a bounce out of here, I think you want to try and get on board if these trades are going to start to work out. Looking at Chevron, so this is going from a mid-cap to a large cap, obviously. All depends on your investing style. The small and mid caps are going to move a lot faster than the large caps. But if you're looking for extreme safety, this one's got a 5% yield, 4.85, and then trading in around the $105 level. You can see it was up around 112, has gently pulled back here, but crude continues to hold. Doesn't want to stay below 60, so it keeps bouncing back up. And again, a move on these numbers, and I'm. If you go and look at their production per barrel per day, or production per day in barrels, one of the things you'll find is, these companies are up in the 1, 2, 3 million barrels a day, these large caps, and when you get into that sort of level, a change of $1 pretty much goes all the way to the bottom line. So if you're looking at as an example, oil going from 60 to 80, that's a $20 change. That's real money per day. So anyway, think about that. Lots of big upside here. You can see this gentle little 6-week downtrend, bull flag, starting to break back out to the upside. The full stochastic is turning back up above the 50% level, and the scooter ranking hasn't got up into the 70. I like the blue line here is at 75%. If they can get above that, that's a pretty bullish scenario. So anyway, I'm liking the fact that the volume didn't increase on the sell-off here. Basically, everybody holding their positions. Looking at Occidental Petroleum, this one was really beaten up badly. Their timing on an acquisition was just before the pandemic, and so they got relatively smoked, I'll say. Stock went from 40 to 10. And now what we see is this big horizontal support and resistance layer. This is the gap down in the early March time frame when OPEC couldn't agree, and then all of a sudden everything fell apart. And then we came over, made a double bottom low here, have run up. And again, this was a pretty big run up from $10 to $30, a pull back to this 24.25 level. and now starting to bounce out of the hole. We're breaking the downtrend. We're bouncing off support, horizontal support resistance. So what was resistance becomes support. And what we'd like to see on this one, obviously, is a push to higher ground. Looking at Callon Petroleum, again, taking some of these smaller names because they've got a little more horsepower to the upside. This one's already moved 16% in a couple of days this week. What we see on this particular chart, up almost 800% from the, I'll call it $4 lows up to $42, so pretty significant thrust. And we're almost back to breaking out to new all-time highs as oil approaches this $65 level. So this could make its next leg higher after this nice bull flag. Saw this back in the December-February period, and it literally jumped from 15 to 40. So big opportunity for upside here, especially if crude's going to get up to that $70 and $80 level. What we don't want to find is a company that has a whole bunch of crude oil production hedged. If they have large hedges on their positions, as price moves up, they won't be able to enjoy that. And if the rest of the oil patch hasn't hedged their prices, then what we'll find is that the companies who have hedged will start to underperform those who are wide open to the upside in price. So depending on how bullish you are, I continue to think there's not enough production, and there's a lot more demand coming. And as those two start to meet, we're about to hit the twist in the streets here. As the pandemic moves largely behind the U.S., we should see West Texas improve markedly, just based on a little bit of supply-demand constraint there. So this Callon Petroleum scooter ranking for the last 3 months up around the 90-some% level, full stochastic hovering up around 80%. That just says where it is in the price range for the last 14 weeks, and what you see here is we're right near the top of the price range, so that's why the chart's turning up. It uses a 3-week average, so that's why it won't always get to 100%. Down here, you'll see the volume tapered off again during the selling. Nobody was really interested in selling, so there's good pressure here for the stock to move higher. And the PPO momentum indicator up over 20 is a very high level, and we like to see that on strong stocks. Cimarex Energy, again, trying to take another oil company here from the large cap group. This one's at 99%, moved up from $22 in the lows in October, firing it up to 65, so a couple 100%. Consolidating sideways and already right back to its prior high. This looks like it's got lots of room to the upside, and again, it's had a scooter ranking up in the 90s. You can see how it was out of favor for the last 2 years, climbed up here, and now it seems to have lots of followers believing in the stock. So this looks pretty tasty in my opinion. All of these energy names, I also did a market buzz on April 27th, and you can go back and check that, and it's all about some energy stocks that are leading the group there. If you'd like more information on GregSchnell.com, you can go to my website and check it out over there. There's 2 of us that provide content to the site. And if you go to GregSchnell.com/explore, you can save $363, and that would give you a membership at $497. We were on this oil trade. The newsletter had it out on the weekend that there were some nice trades setting up there. So hopefully you've got some interest there, and if so, head over to the website and you can check out more information. Thanks for taking the time to join me on the Daily 5. Hopefully there's some good trading, good profitable ideas there for you. Thanks, everybody. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.